Hi, I'm Scott Starratt with Starratt Wealth Management, a part of Canaccord Genuity Wealth Management. So August was a relatively unremarkable month as most major markets ended up higher, but really it was the outlook to the fall that caught most people's attention. Let's start with the interest rates. First, there was a lot of drama in the US around the Federal Reserve Board and whether they would finally decrease interest rates after taking a pause for the last few meetings. The politics heated up as Trump, who is very focused on lowering interest rates, wanted to create a lot of waves by tweaking some of the people that sit on the Federal Reserve Board, or the Federal Open Market Committee. The next meeting is towards the end of September, and we'll see then whether the interest rates are truly going to drop in the US. It appears right now as though there is a large chance that that'll happen. The Fed down the States is more concerned now about unemployment than they are about inflation. And they have a kind of a dual mandate where they have to watch inflation on one hand and watch the unemployment rate on the other. And there definitely seems to be a little bit of job weakness creeping into the US, even if inflation remains relatively higher above the targeted rate of 2%. In Canada, it's a little bit of a tougher call as to whether the Bank of Canada lowers rates in September. Really, the odds right now are about 50-50 on whether they will lower rates or not. And it all depends on whether the economic outlook continues to be as weak as what it appears to be the last few months, with the tariffs hitting a little bit harder in Canada. On the political side, it was a relatively quiet summer. Except for Trump, as usual, will never be quiet, it seems. But, it was a relatively quiet summer in Canada. That'll heat up now as we hit September. And I would expect preparations for the budget, which I believe is going to hit Canada in October. And it'll be really the first monetary test of the Carney Liberal government in order to see where the direction's going to go on what he plans to do with spending as well as taxation, and finally with the tariff situation, since they haven't had an agreement yet with the United States, although it appears as though they're talking more and more. On the market side, we continue to have the uncertainty over whether the artificial intelligence boom, which has occurred really for the last few years, is going to continue, or whether it's a short-term or whether there could be a short-term dip. Interestingly, there are two, I would say, rumors that occur during the year. One of the axioms is sell in May and go away, implying that you should sell or lower your exposure to stocks in May, and then wait until towards the end of the year to buy again. That obviously would not have worked this year, as markets since May have done quite well. The other one is the weakness that does sometimes occur in September and October. Again, statistically, there's not really a lot that can be said about that. It does depend year on year as to whether there's going to be weakness in the first 2 months of fall. But a lot of market participants again are looking at enhanced volatility for the next few months. One, as job losses in the US, or job slowdown anyway in the US, might pick up, as well as the tariff bite really hitting over the next few months. So time will tell. As far as client portfolios go, we're pretty well bang on what we have been talking about over the last little bit, and that's ensuring that we have money available to take advantage of opportunities, while at the same time ensuring that we do have exposure to the market if the market continues to grind higher. Again, that's been the right call as the markets have continued to grind higher since April. But over the next few months, we want to again have the opportunity or take advantage of any volatility in the markets. Other than that, Jim, myself, Angela, and Alex are around, so that if you do have any questions, please do reach out. We will be starting our year-end reviews from a taxation point of view, et cetera, in a couple of months. And over the next little bit, we'll be reaching out and updating any reviews that may have been missed during the summer because you were on holidays, or any other things that might come up. Please do reach out. That we're all around to chat.